Hey everyone, what is up? Hope you're having a flippin' incredible day wherever you are in the world. Welcome back to my good friend Tony Hammond. We are here today to talk anything and everything life insurance off the back of our previous two podcasts, which went down extremely well. How are you, Tony?
Hey James, I'm doing brilliantly. Thank you. Thank you for asking me back. I'm loving this, and really looking forward to talking about life insurance today. Yeah.
Dude, my pleasure. And you know what? You know the buy to let mortgages
Hmm.
podcast that we did last time? I had like two, three people who reached out to me on Facebook DMs and they were like, whoa, that guy's passion for mortgages is flipping awesome. And so it should be because they're very important things. And yeah, that's what I've that's what I love about our last two episodes, and I'm sure it's going to be more of the same today. We're going to make life insurance something passionate and exciting to talk about. I know we're going to do it. We'll find a way. So first of all, life insurance, Tony, if we were just to break it down and make it really simple, let's say that someone has never heard of it before. I know that it's maybe something that people talk about commonly. It is something that we have a vague awareness of what it is.
Yeah.
But if we were just to break it down so that we can have a really simple understanding of life insurance and how it works, and then build on that as the podcast progresses.
Sure. Yeah. Happy to do that. I have the conversation a lot with clients where they think, oh, I really should get about doing that and getting life insurance. But
Mm.
where I come from, it's about making your shoulds a must. And to me, this is an absolute must. This is a no-brainer. Um, what we do in Hammond Financial, again, to keep it simple, we provide a financial safety net. And this is exactly what it is. This is a financial safety net. If the worst thing happens, you're not around anymore, what's going to happen to your loved ones, your family, your children, your spouse, your partner? What happens if you're not there? None of us want to think it's ever going to happen to us. Um, but unfortunately, we know it does. It doesn't have to be disease. It could be an accident, something like that. But it can be catastrophic for the families that are left affected by it. So not only have they got to deal with the loss of their loved one, it's the financial catastrophe where they just fall off a cliff. They've got to deal with the grief, but some people can lose their home because you haven't put your ducks in a row and done the basic stuff first. So I do lots of different products, but this is about getting your basics in. And so this is an absolute must. So to answer your question, um, life insurance pretty much does what it says on the tin. It's an insurance that pays out typically a lump sum um, if you die, or if you're diagnosed with a terminal illness. And by terminal illness, it's where a UK consultant says you've got 12 months or less to live. So quite often stage 4 cancers and things like that. So it can pay out even though you're alive, but you'll know that you haven't got that long left. So some people want to do something with it while they're still alive, amazing holiday or something like that, or not. A question I would, so a lot of people have heard about life insurance. A lot of people listening will think, yeah, I've got that sorted out. You need to review it on a regular basis because our lives change, partners change, mortgages change, businesses grow, whatever it may be. But one thing that really saddens me when I speak to a client, because I ask to have a look at their existing policies just to see if they're still relevant, and I provide this service for free. Um, is your policy in trust? Now you think, well, what difference does that make? Well, let's just say a dentist has life insurance for £500,000 and they die. You may or may not know that their estate isn't released. It has to go through something called probate, where in essence that HMRC make sure they get their money first before anybody else gets anything. And I won't go into the dynamics of exactly how much that is, but once you get over your threshold, the government take 40% before anybody gets anything else, which I personally believe is, I can't stand it because you've already paid tax once. Why pay tax again? So it's about getting your ducks in a row. If your policy isn't in trust, it goes into your estate and is taxable. So if you go over your inheritance tax threshold, let's say it's a single person and they with their property, their threshold is £500,000. The life insurance that they've got in place, with all best wills, it's going to take their policy to say 800. I'm just making the figures up. It doesn't really matter. they would then be taxed on 40% of that 300,000 over and above their threshold, which is criminal. By putting a policy into trust, it takes the life insurance out of their estate. So first of all, there isn't any inheritance tax due on it. It also then doesn't have to go through to probate, because of the trust, it gets paid to their trustees, typically their partner, the friends, the family, and they'll get that money within days and weeks of them dying when they really need it. So life insurance does what it says on the tin if someone dies or diagnosed with terminal illness, but it's really, really, really important to make sure it's put into trust, because I see so many policies out there that hasn't done the job. And so it's really not doing what you wanted it to do in the first place and paying for.
You know what? That's interesting, and we're going to get more into how things can be structured in just a minute. Is there ever a disadvantage to putting it in a trust, or should this be the thing that we do every single time?
Every life policy that I do, I put into trust every time. I can't think of a circumstances when you wouldn't, because it's taken it out of your estate. It gets the right money to the right people in the right time, is what it does. It doesn't cost you a penny. I do that as a service for all my clients because it's the right thing to do. Some brokers may not want to do it because it's a bit of a pain, it's extra work, things like that. But that's probably old school. The new school, that the providers, they make it really easy. It's online, most of it. If not, it's a one-page form. It's really straightforward. And I talk to clients about who they want to be a trustee. I'll phone the trustees up to explain what it means to do it. But life insurance gets paid to the trustee. So let's just say it's your partner and it's your brother, for argument's sake. It could be anybody you need to trust, because the money gets paid to them. They then do with it what you've told them. So you typically have something like a letter of wishes where it say, okay, I want this to pay off my mortgage, or to pay for my children until they're 18 or 25 or whatever you want to do. So the trustees know what to do with the money. And they get it quickly. And so they then can do what you wanted to do with it. So rather than sit it 40% going to the government and you have to wait 9 months to a year for probate to finish before you can get it anyway, just for the sake of one form, it's criminal, in my view, not literally, obviously, but it's really bad advice if you've got a life insurance policy and it's not put into trust. If you've got a life policy, and it's not put into trust, give me a shout, I'll do it for you.
Interesting stuff. Well, it seems like a no-brainer, really, when you put it like that. And
Absolutely.
actually, the things that you were saying on trusts just a second ago, and how one is able to efficiently structure their life
Yeah.
insurance policy, actually leads very nicely into what I wanted to ask next, which is, let's compare dentists who are sole traders versus dentists who are limited companies. How can we structure our investment in a life insurance policy to make that as efficient as possible?
Okay, that's a really good question. The sole traders, and a lot of the dentists may already have a life insurance policy in place. It'll be in their personal name, because a sole trader, it is, as far as HMRC are concerned, they just look straight through the structure to the person. So it's not an entity like a limited company. Even though you're trading as a company, it's a sole trader. HMRC just see the person, that they would see James Martin. So you'd have a life insurance policy in your personal name, which you paid out after you've already paid tax on the money. So it's paid out of your income. So you've already paid tax on that money. A limited company director. So there's plenty of dentists out there that aren't there that have a limited company. So they're the sole director, or maybe one or two directors. They can do it where the business pays for the life insurance. And it is very tax efficient. It's one of the best products out there to be tax efficient. So policy, very similar, still life insurance, and the premiums aren't that different if you take tax out of the equation. But so let's say we've got a sole director limited company dentist. So they're working for their own limited company. The limited company pays the premiums. They can then offset that premium against tax. It doesn't count as a benefit in kind, so on the P11D. So it's putting life insurance on expenses. Why wouldn't you do that? And then when the money's paid out to their beneficiaries, their loved ones, it's tax-free lump. So it's tax-free going in, it's tax-free coming out. Every time, if you're a higher rate taxpayer, it's 49% cheaper than in real terms, taking tax into consideration, it's 49% cheaper as a higher rate taxpayer than it would be buying it in your personal name. If you're a basic rate taxpayer, it's 40% cheaper. So there's massive savings. So if I'm a dentist, first of all, life insurance is cheap because the risk of it happening to you, there's lots of ifs and buts, but let's say it's, for argument's sake, around about 10% chance within your working life that's going to happen to you. But it's still a really important one to get covered. So because insurance is based on risk, it's relatively low compared to the income protection, which as you remember, is if you signed off work for any reason, it will pay out. There's a much higher percentage chance of that happening than life insurance. And so because there's a less chance of it, it's much cheaper. It's a real no-brainer. Everybody listening should have a life insurance policy to protect their loved ones. If you've got a limited company, put it through the business. Every time, it's at least 40% cheaper than it would be doing it in your personal name. Why wouldn't you do it? I'm sort of shutting myself up because I go on a rant, don't I? But I wanted to make sure I answered your question.
No, listen,
As you can see, it's really passionate. Everybody should do it.
It's awesome, and this is exactly what people were raving about from the last few podcasts, mate, was the energy that you bring to these topics, which is flipping wonderful. So if you put it through your, you know, if you're a sole trader, right, and you're paying a life insurance policy, it's not tax deductible. Have I understood that?
But you've already paid tax on it because you take it out of your income.
Yeah.
So you've already paid your tax.
Yes.
So tax has been paid on the premium.
Yeah.
Where if you put it through your business, the product name that some people may have heard of is called Relevant Life. I really try hard not to use the jargon that the industry use. What does Relevant Life mean? You wouldn't even know it's a life insurance policy, would you necessarily? But that's the name that the industry put on it. It's death in service. That's what, if you put it through the business, it's setting up, you told me to keep it simple, it's setting up your own death in service. If you do it through the business, you can do it for yourself personally. But if you then have if you've got your staff, so your practice manager, your practice nurse, the reception, things like that, we all know how difficult it is to keep hold of the right staff. Very cheaply, you can set up a life policy, a death in service policy. People understand what that is, does what it says on a tin, for your staff, where the business pays the premiums. And the beneficiaries to the staff, if they were to die, get it tax-free. So that's again a very tax-efficient way of doing it. But you know, for more savvy ones, I think, well, I want to keep my really good staff, but I also want to attract the right staff. Why would they want to come to my dental practice? It's because we look after our staff, and if you feel valued, you want to stay. I think it helps part of the team essence and things like that as well, and the culture and the ethics of the business. So that's something to think about. So sorry, James, you were going to say?
No. All I was going to say was, so in essence, put it through the business where possible. That's how it should be structured.
Yeah, absolutely, no brainer.
Awesome. Let's develop the taxation concept that we were talking about. Let's develop life insurance with relevance to taxation. Is there any other tax considerations that we need to know about? Any other ways that we can be efficient?
Yeah, well, putting it through the business, so you have to have an employee-employer relationship. So by that I mean it doesn't work for a sole trader. We've said that. So you long as it's got that, it could be for any staff member, and I think I mentioned before, so that wouldn't go down as a benefit in kind. So there's no P11D for it. Unlike if you have your private medical or your car through the business, that goes down as a benefit in kind. You have to pay for that. I think people are familiar with that. Where life insurance through the business, there isn't any benefit in kind. And also it doesn't count towards your lifetime allowance. So for your pensions and things like that. I'm not going to touch on that today. But it doesn't count towards that. It was all part of the legislation going back somewhere. Life insurance is often linked to your pension. But so long as you qualify, i.e. that employee-employer relationship, It doesn't count to your lifetime allowance either. But as far as tax benefits are concerned, as I said, just to reiterate, if you're a basic rate taxpayer, it's 40% cheaper to do it through the business. If you're a higher rate taxpayer, it's 49% cheaper. But if you're a sole trader, you don't have any choice. You've got to do it in your personal name.
Awesome. Thank you for
In
that.
essence,
So that's literally top to bottom tax efficiency for life insurance policies, which is really flipping cool. Let's talk about the people who actually benefit from these policies. Is this just our immediate family? Can we mix and match policies on that front? Can there be more or less people? How does
it,
that look? How does
it,
that
it,
work?
it could be whoever you want it to be. It could be the local cat's home if that's what you're passionate about.
The local what?
You
Sorry? Cat sanctuary.
the
Oh
local
wow.
cat's home. Yeah, it could be any charity. So it could be a
Cool.
charity, it could be your loved ones, it could be your best friend, your partner, whoever you want it to be.
Mm.
So you set that. As I say, with all my policies, I put them in trust. Um, for me, a lot of the time with the dentists that I work with, a lot of them are married. They would, so just excuse me, just taking that as an example. So a married dentist, they would have their partner, their spouse as a trustee, and somebody else as well. So their best friend, a sibling, somebody like that. It's best not to have your parents because typically they're not going to be around as long as you. So it's going to have somebody that you trust that the money goes through. So that's typically how I would set it up every single time. So put it in trust. It makes it easy and it makes the money go to the right people. So you can choose whoever you want to do it.
Cool.
Um,
Any ins and outs that we should know about in addition to that? Anything that we haven't covered so far? I've got a few more questions.
yeah,
I'm just
there's
curious. I just want to go really broad in case there's anything that we
yeah.
might have
Okay, so
overlooked.
let's keep it broad. There's different types of life policy. There's one that's called, again, I don't want to get too technical about it, level term. So if I've got a life insurance of £500,000, typically, often it's for people to cover their mortgage. So if they died, their partner can have the house rather than the debt. Keeping it on a level policy means that they have £500,000 across the length of the policy. The most common way that a lot of brokers do it is they have what's called a decreasing term. So as their mortgage goes down over 25, 30 years, whatever it may be, and their balance goes down, the life insurance goes down to match it. So it could be that in 20 years' time, your life insurance is not really worth that much, but you haven't got much mortgage to pay off. Where I look at it, for the cup, often for the price of a cup of coffee, the difference between the decreasing term and the level term, that's it. So why not go for the level term? Because you can justify it. Also, a lot of people, again, in my view, old-fashioned advice, they would go for a decreasing term policy. If they're married, they'll have it on a joint policy. So it's joint policy first death. So Mr. and Mrs., one of them dies, the life insurance pays out. But the surviving member doesn't have any life insurance. And 20 years down the line, the life insurance is a lot more expensive. Where again, because life insurance is cheap, I can't think the last time I did a joint policy because I would set it up as two single policies. So you've got Mr. and Mrs. have their own life insurance policy. If either of them die, it pays the mortgage off, but the other person still has life insurance around. And God forbid, nasty depressing scenario, they both die in a car crash, their beneficiaries have twice the amount of insurance for the cost of a cup of coffee a month. That's typically the only difference between the two.
There we are.
There's those sorts of things to take into consideration.
Of course.
Um,
Thank you for sharing. Were you finished just then? Sorry.
yeah, well, I'm just going to go on to another area. So I've talked about it, if you're happy for me to do so.
Of course.
Uh,
Yeah, absolutely.
um, we talked about putting it through your business. There's so the relevant life product is really good for small to medium enterprises, typically with up to 3 members doing it. So you could have yourself as a sole dentist, your practice manager, and the dental nurse, just as an illustration. If you've got a bigger practice, when there's lots that I talk to have, the corporates nowadays, they've got lots, then I would then put it through a group life policy. And this is what's really sexy about it, in my view. A group life policy is really for 3 or more members of the company. And you have set amount, typically 2 or 4 times salary. But the way that it works is that there isn't, unlike normal life insurance, whether it's in your personal name or through the business, the group policy, there isn't any underwriting involved. So for some people that would struggle to get life insurance, if it's on a group policy up to certain levels, and it's quite high levels, they don't have any medical underwriting either. So I've got clients where they would struggle to get it. They've had, I'm thinking of one just down the road actually, that had skin cancer and survived, and wonderful that a lot of cancers are now survivable where they weren't 20 years ago. So the insurance policy paid out, but they can't get any more life insurance. Put it through a group policy, and it's only a small business, and they've got 5 members. There's no medical underwriting to do. If you've got 3 or more staff that you're paying it for, it's cheaper to put it in a group policy as well. So that's something else to think about. We talked about beneficiaries. I just wanted to cover that point off, okay? Because I think that's very
Sure.
I was going to say relevant then, but that would be a play on words, and I didn't mean that. That sounds very corny. The other way to think of, which most people wouldn't have heard of, which it's not necessarily innovative, which I know you always like to talk about, but there's a life insurance product designed for families. It's called Family Income Benefit. I don't know if you've heard of it at all before, but what this does, rather than pay a lump sum, so typically life insurance is people buy when they get the house, they remortgage, and it's to cover the mortgage and other things. So let's say that happens and the house is paid off, husband and wife, one of them dies, mortgage is paid off, but they've lost the income of their partner. They still have school fees, they still have bills. We all know the cost of living's gone up. What do they do then? Well, a family income benefit policy will pay a set amount every month, typically as a replacement for the lost income that they've had. So you could set it so if a dentist is earning £4,000 or £5,000 a month and their family would really miss that, they can set up a monthly amount to be paid of anything. It's £500 if that's all they need, £5,000, you name it. But it's because it's a really helpful monthly policy to back up the lost income. If it's a single parent, then it's a money that they can pay their guardians to look after their children when they're not around. So there's lots of ways that you can do that. If you're a full-time carer because your partner's had a stroke or something, this will pay you your monthly income, so you're able to do that. There's lots of ways of doing it. So it's a life policy that's paid monthly for various different reasons. A lot of the time, you'd have your lump sum one that we've already discussed, pays off your mortgage. You'd also have a family income benefit policy alongside it as well, the more astute ones to pay for the living expenses as well, because it's not just the mortgage. We all know there's loads of other bills that you've got to do as well. So I would encourage anybody with a family, whether that's just their partner or with children, family income benefits are really important insurance to have. It's relatively very cheap. And I just think it's another way of looking at it that a lot of brokers, you may not have heard about it. Go figure, you know. So I've sort of rattled through, but they're the 4 main areas of life insurance that I cover. Life insurance in your personal name. Sorry, do you want to stop me, Jim?
No. Sorry, I was interested to hear. There's the 4 types: life insurance in your personal name.
The one through the business called Relevant Life. That's good for 2 to 3 employees. You've then got the group life, which is anything for 3 above, you name it, there's no limit. And then you've got the really important one is not to forget, which is the family income benefit, which talk about that financial safety net, don't I? So if you're not around and you want to look after your loved one, your family, your partner, your children, you pay the mortgage off with the lump sum, and then you give them a monthly amount of whatever amount that you want it to be to cover the cost of living and the bills that go through. So financially, they're not going to be devastated as they are to lose their loved one as well. So you're really looking after them. That financial safety net is put in place. So we all think this isn't going to happen to me. but we know it does. We'll all know people that have been affected by cancer and things like that and lost people way too early. This is making sure that if it happens to you, that you've looked after your loved ones. You have to insure. You've heard me talk about it before. You have to insure your house if you have a mortgage. You have to insure your car. You probably insured your phone, your pet. This is insuring you, and it's ensuring that your family are looked after financially in the event that you're not around. And that's what all of these different ones do. So, sorry.
All I was going to say was thank you for sharing that. I thought you were finished just then. Was there a little more?
No, I was just, I think it's really important as a broker, because there's good dentists, there's bad dentists, there's good brokers, there's bad brokers. I think it's really important to understand the whole backstory of the client and their circumstances to make sure you're doing the right advice. It's about doing a proper job and not just doing the quick, okay, I'll give you a joint life on a decreasing term, blah, 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 because that's what I always do. It's about going above and beyond and getting the right things in, and at least making people make a decision based on knowledge. That's what's so important. That the overriding bit with all of this, no, not the overriding bit, but a really important point, which I haven't mentioned yet, is, if you're happy for me just to carry on,
Yeah, of
is
course.
a lot, not all life policies, but a lot of the life policy providers will give you a lot of added value services. So I've asked the question many, many times that if I told you that you could access a British GP on the phone or on the video 24/7 from anywhere in the world, how much would you pay for that option? And often the figure people say £20-25, they'd pay that because we know how difficult it is getting to a GP nowadays. Where if you could phone up a GP at 3 o'clock in the morning or on a Sunday or when you're in holiday in Spain, you can't get to your GP. If you can speak to a British GP for free, that's what a lot of providers do. They'll also provide counselling for mental health issues, which we know is a big area. Physiotherapy, all these other things. If there's a diagnosis, you can get a second opinion by the top consultant in that area. These are all value-added services that a lot of life providers offer. So you can have a really cheap life insurance policy, and yet the value added you use every day. If you've got kids, things happen. They don't happen, as we all know. If you want to see a consultant, don't get poorly at a weekend. If you want a GP, it tends to be out of hours, doesn't it? Or on a bank holiday and things like that. You've got this service. Speak to a British GP within a couple of hours. Typically, they'll write you a prescription, a private prescription. And the service I've had, they even phone up your pharmacy of choice to make sure that they're happy to take it. Brilliant service. And that's worth paying for the insurance alone, in my view. Many times that's happened.
Thank you for sharing all of that, Tony. Flipping gold dust. And it always reminds me, these sorts of things, they always remind me of this. And this is how I articulate similar things to people whenever it comes to these decisions that we put off until one day they catch up with us. It's fine. It's fine. It's fine. And then it's not fine. Just like that. You know what I mean? Yeah. And the thing is, the point where it's not fine, you have no idea when that's going to be. Is that going to be tomorrow? Is it going to be next week? Is it going to be in the next 10 minutes? Who the heck knows? But if you've got something in place, what it means is that you are prepared. Tony, we're going to wrap up in just a few minutes. Thank you for another insightful podcast. Let's have a fun question just before you leave. If you had to pick like 3 of the biggest no-nos that you come across, or 3 of the biggest errors that people make whenever it comes to life insurance through all your conversations with dentists, what would those be? I think number 1 is going to be not having one in the first place. That's got to be the biggest error of all. Yeah.
It is an absolute no-brainer. So yeah, not having one, not having it in trust. That is really bad advice in my view. Lazy on that side of things. And then not thinking about the whole, so the family income benefit as an example. Is it better to put it through the business or not? You've just got to think a little bit. And also for dentists, as I say, it's about retention of your staff. Put it through the business. Provide benefits to your staff. They're going to want to work for you and not go somewhere else. And it's not expensive. and it's tax deductible. But as I said at the beginning, it's about making your shoulds a must. Don't leave it till tomorrow. Do it now. Make it a must that you're going to sort this out. Commit to it, because it's a no-brainer. You're looking after the people you love most in the world. Why make that a should? You've got to make that a must. And then, really, as I say, what we do, the underpin of everything that we do at Hammond Financial, is that we provide that financial safety net. This is what we do. We look after you and your family. And as you can tell, I'm very passionate about what we do.
For sure, 100%. Tony, if anybody wants to get in touch with you, how might they go about that? What's the best way?
They can contact me. I'm happy to give my details now, James, or do you want to do that on the podcast?
Yeah, feel free to shout them out. Yeah.
Okay. You can contact me. My telephone number is 07857 630 570. My email is tony@hammondfinancial.co.uk. And you can always look at the website, hammondfinancial.co.uk.
Top stuff. Tony, thank you so much for your time today. Passionate as ever. We're going to see you back soon on the Dentist Who Invest podcast. Much love, my friend. Let's speak soon.
Thanks as always. Cheers, James. Thank you.